Hello, welcome back to Commerce Easy Notes. Today we are going to discuss on budgetary control's sixth part, cash budget in detail. Cash budget is a written estimate of firm's future cash position which predict some future periods cash receipts from different sources, cash disbursement of different purposes and the resulting cash position generally on monthly basis as the budget period develops. It is prepared on monthly basis. What are the expected cash inflows and outflows are assessed and then it is compared with the actual measurement. Advantages include it ensures sufficient cash availability, it helps in a certain shortage and excess of cash, useful for financial planning, and it also enables the management to formulate a suitable dividend policy. There are three ways of preparing cash budget. The three methods are receipt payment, adjusted profit and loss, and balance sheet. Firstly, we have to look receipt and payment method in detail. We'll do it with an example. We'll see what is receipt and payment method in detail with an example. KL Limited wishes to prepare cash budget from February to April 2020. Prepare cash budget and the following items are given. 4 months, January, February, March, April. Sales, purchase and wages are given in rupees. And the question says, 50% of sales are of cash. Credit sales are realized in each month following sales. So, 50% of, for example, January sales 2 lakh. 2 lakhs, 50% is cash sales. That is 1 lakh cash sales and 1 lakh credit sales. So, cash sales are realized 50%. That is, cash sales are realized on the particular month and the rest on the coming month. And second point says, creditors are paid in month following the month of purchase. We'll assume all the purchase of credits in nature. Therefore, purchase of, for example, 1,50,000 of January is of credit purchase are realized in next month, that is February. Likewise, February's 1,80,000 purchase is realized from creditors from March. Likewise, in March, April. The machine costing 24,000 purchase in February, 50% paid in the month and the remaining 50% next month. Therefore, 24,000, 50%, 12,000 in February and the rest 12,000 in March. And cash balance on the 1st of February, the opening balance is given 10,000. So the solution looks KL Limited cash budget for the period February to April 2020. 4 columns are given, particulars February, March and April. All rupees in. And opening balance are given in the question 10,000. And cash balance 1,20,000. February's sales. We'll see what is February's sales. February's sales is 2,40,000. 2,40,000, 50% comes to 1,20,000. That is given in the cash sales 1,20,000 and receipts from debtors. We said we received from creditors how much? 50%. That is sales from the previous month. 1,20,000, 50%, 1 lakh. That will be recorded in receipts from debtors, 1 lakh. Okay, so that is how we get the receipt side, and total of this it amounts to 2,30,000. And now payment side. Creditors is given in the purchase. We said in the question it is said that credit purchase are paid in the following month. Therefore, purchases from January 1,50,000 and wages as usual, wages of February and machine it is said that 24,000 costing machine is being recognized 50% of February, and next month 50% for 12,000, and in March 12,000. Therefore, total of payments come to 1,90,000, and the difference between receipts and payment. The receipts and payments difference 2,30,000 and 1,90,000 comes to 40,000. This 40,000 is the closing balance of February. It is brought forward from February to March, and it becomes opening balances of March, 40,000. So this is how it works. Now we will have to repeat the same process with March. The opening balance is given, and then cash sales, March sales 50%. March sales we know is 1,50,000. That's 50% is taken, 75,000. The receipts from debtors, that is February sales, that is same as 1,20,000. And total, and similarly creditors purchase of February 1,80,000, made is 23,000, machine 20,000, and this difference is calculated, and then we'll see 20,000 is the closing balance of March, and that becomes the opening balances of the April. So this is how cash budgets work. And now following the same step here, we'll get April cash sales 1 lakh, and receipt from debtor 75,000, and total 1,95,000, and creditors 1,60,000 previously from March, and wages 20,000 related to April itself, and that difference becomes about 1,95,000 minus 1,80,000 amounts to 15,000. So this is how cash budgets look like. Thanks for watching.